All right, after the filtering process, we want to go over the flow and the basis and the foundation of a flow trading plan. Now, right here, if we go over the first slide, then what we see is again those foundational levels. And we need to understand when we're talking about the foundation of a flow trading plan, we are mainly talking about the bias and the narrative right there. Boundary, target, entry, risk management, it's all quite similar. But the way you get to a bias and a narrative is different in a filtering process trading plan and different in a flow trading plan. That's quite important. Now, if we move on, then we see pick an instrument. So this is, if you are interested in a flow trading plan, then this is the first thing I would suggest you to go ahead and do. Pick an instrument. The first thing we want to focus on when picking an instrument is volatility. Because the more volatile the instrument, the more opportunities. For example, if we are trading something like the South African rand against the US dollar, that's not a very volatile pair. So we want to focus on either Forex majors. My advice would be either EU, GU, Australian dollar, US dollar, maybe US dollar, JPY. If you do not want to trade Forex and you want to focus on the indices, then that is really good as well, where of course ES, NASDAQ, YM, US 30, are very volatile as well. And the indices are more volatile actually than the Forex majors even. So if you are looking to trade a flow trading plan, then the indices would also be a really good option. Next to that, you also have, for example, crude oil, also extremely volatile, even gold or silver, also very volatile. Now, avoid doing a flow trading plan on one of the crosses. They are not volatile enough to actually go ahead and go into the 1 minute time frame, for example. So avoid doing that at all costs. Then the second part, how to pick an instrument, is does it fit your personal time schedule? So the kill zones we discussed for Forex majors, if you're going to focus on EU, for example, Euro, US dollar, then you might want to trade the London kill zone. But if you're like me and you are in South America, or if you're in North America, you're in that American time zone, then it's not very nice to trade in the middle of the night. So for me, EU, GU is not really an option unless I want to trade the last part of New York kill zone, but I do not necessarily want to do that. So my personal preference would go out to, again, one of the indices or crude oil, for example. So does it fit your personal time schedule and your time zone as well, the kill zones that you want to trade? Based on that, you can pick an instrument. Now, moving on, what is exactly the time that we want to focus on? Because when we talk about a flow trading plan, it is more important. Well, of course, filtering process is also extremely important. But when I talk about the filtering process, it's extremely important to pay attention to time on the higher time frame, meaning news, economic calendar, what is it doing? Where time on the lower time frame right here for a flow trading plan is more important because it's going to have more impact, noticeable impact, because you're going to most likely even be on the 1 minute time frame if you want to be on the 1 minute time frame. So with that, if you want to be on a 1 minute time frame, you need to be more aware of the certain times that we have. Right here, news. Be more aware of lower impact news. And I'm not referring to yellow folder news, of course, unless you're trading crude oil and you want to look at crude oil inventories. But I am also talking about US dollar unemployment rate, for example. Also red folder news, where I would not necessarily pay attention to that if I'm trading a filtering process. But if I'm trading a flow trading plan and I am on the 1 minute time frame, and in 1 minute there is news impact, and I see before that is not very volatile, I wait for that news impact to then potentially get involved. So those are again those volatility surges that you have into the market, the injections of volatility, which is also already, besides the big three, they have more impact, of course, seen on the 1 minute. So be aware of that. Then, can you trade before that? Of course you can. You can definitely trade before that on the 1 minute as well, but just be aware, if we consolidate before that, it might be because at, for example, 10 a.m., we might have some PMI news. Then right here for the indices, I would argue 8:30, if we have news at 8:30 right there, that is perfectly fine tradable. And if we have, as a general rule of thumb, if we don't have news at 8:30, red folder news for the US dollar, then we focus on 9:30 until 12 a.m. Are you going to be trading both sessions right here that I'm describing? You don't have to. So I'm giving you multiple options. You might have a job next to it and you might only be trading the afternoon part. So most people like the 9:30 until 12 a.m. I personally also really enjoy the PM session, where the top one is an AM session and the bottom one is a PM session. And the PM session right there is from 1 p.m. right there until 4 p.m. 4 p.m. is the bond close, so that is where the indices, the volatility really dies down as well. Then if you want to narrow down your focus even more, you can again focus on power hour right there, 3 p.m. until 4 p.m. Everything, all the times discussed here, is of course New York local time as well. Power hour, if you're very limited in your time, but you do want to trade a flow trading plan for the indices, for NASDAQ, ES, for YM, is going to be really interesting as well to trade that power hour. Now, for Forex majors right there, and I do want to say that if you are going to trade a flow trading plan, I personally would advise some of the indices, maybe crude oil, gold, silver, or DAX, like we see right there as well. But Forex majors, I would argue you're better off trading a filtering process trading plan, or a hybrid trader. But again, we'll get into that as well in a little bit. Now, right here, if you do want to focus on the Forex majors for your flow trading plan, which again, it is doable, very doable, but I believe Forex is a little bit better for filtering process, indices, and in general, the miscellaneous pairs as well is a little bit better for a flow trading plan. Forex majors right there, we see 2 until 5 a.m. Again, New York local time. That's the London session. So you can narrow down your focus a little bit right there if you want to focus only on the morning session, for example. Then right here, we also have 7 until 10 a.m. for the Forex majors right there. And that is where, again, you can focus only on that specific session. Do you need to trade both? No. You can trade one singular session right there because you're also going into the lower time frame. So if you want to trade both, that's 6 hours. 6 hours staring at the chart is not going to be very fruitful in my opinion. Then miscellaneous right there. We have crude oil. Crude oil also is very active after 9:30. So the equities open that we have on indices. It is the volatility for crude oil dies down a little bit earlier than on the indices. So usually around 2 p.m., something like that. Then gold and silver is also very nice tradable actually for your flow trading plan. Gold and silver, I would refer more to Forex kill zones as well, rather than the indices kill zone. So the volatility again on gold and silver dies down a little bit earlier. Then DAX right there. DAX again refer to mainly Forex kill zones with a tint of the equities open as well. So what I mean by that is DAX, you want to focus on a 3 a.m. open. So 3 a.m. open is extremely volatile. 2 a.m. you can potentially trade it, but be aware at 3 a.m. that's like equities open for DAX. That's extremely volatile. Then until 5 a.m. that is perfectly fine to trade. After that, you'll notice in the New York session, it is also quite volatile. So equities open, etc. also has impact on DAX. DAX follows the other indices. So DAX is like almost like a far long lost brother of the other indices. It follows the other indices as well. Then, if you can now understand the time as well, and you have an understanding of the volatile pairs and volatile instruments right there, you can probably get to a conclusion of which instrument is interesting to you for your flow trading plan. Then moving on, bias plus narrative, because again, we mentioned in the foundation levels that the only difference really is that bias and the narrative, because now we're going to make use more of the lower time frame. And if we want to make use of the lower time frame right here, then the first thing we want to focus on is the higher time frame PD rates. We are trading in between higher time frame PD rates. The lower time frame is our guide to it. So can you imagine the chart? You have marked out all the higher time frame PD rates right there. And again, that can just be previous week high, previous week low, previous day low, previous day high, and we can trade towards them. So the lower time frame will tell us how we can trade towards that next PD rate. Now, how will the lower time frame tell us that? Well, that is where we have fair value areas. Which fair value areas are holding? When we talk about a flow trading plan, before I move on, these elements right here are absolute crucial to understand. And at the beginning, it might be very difficult to actually master them or to fully understand them, but over time, you will truly master them. With a flow trading plan, you are paying, I always like to say, you pay more attention to detail with flow trading plan. It's almost like you're squeezing the rest of the juice out of a lemon. Where the filtering process, you have so many opportunities. You have so much fish in the ocean. You can choose whatever you want. A flow trading plan, you do not have that luxury. So you almost sometimes need to be super aware for the opportunity to happen, because the opportunity, you might miss it if you're not paying attention, if you're just going in a filtering process mindset where you can be really relaxed almost and extremely picky about your price action. Here you have to pay more attention to detail in a flow trading plan. But the first part again is that fair value area. Which fair value areas are holding? Is fair value being offered? Are we seeking that liquidity instead? Then right there, the next component is candle signs. What is candle signs telling us? Based on the PD rates we are trading into. So on the 1 hour, 4 hour, we might trade into certain PD rates, we might trade into certain highs. Are we sweeping those highs? Are we holding? What is the 2 candle rejection doing? Every single little detail about candle signs that we have gone over thus far. That is what we need to take into account. The next to that is order flow. The last part is, again, are fair value gaps following through with new fair value gaps? So previous fair value gaps, are they now creating, based on 2 candle rejection, based on the candle signs, following through with a new fair value gap? And all those components right there, they will tell us if we want to trade into a certain higher time frame PD rate, if we want to hold off that certain higher time frame PD rate. So we need to pay attention to what the lower time frame is telling us. It's our compass, it's our guide right there. So how do we actually do this in a chart? If we take a look at GU right here, GBP US dollar, Forex Major, and we take a look at the monthly time frame first. Again, are you going to be making a lot of use of the monthly time frame when you're trading a flow trading plan? Arguably not. Maybe once a month you're going to quickly look at it. Right here, we had a quite easy target in the form of this low right there and in the form of that fair value gap. So it was quite easy to understand what we were aiming for on the higher time frame. We were already continuing lower. So this is where now on the flow trading plan, we need to be aware, all right, we have this daily fair value gap right there, for example. Are we going to trade back into that daily fair value gap first to then continue lower, or are we already going to continue lower instead? This is where you can potentially also see the advantage that you have over a filtering process trading plan. In a filtering process trading plan, you might want to wait for that daily fair value gap, or you might want to wait for a 4-hour fair value gap. And the delivery already happens where you potentially cannot get involved. Hybrid trader could potentially get involved right here as well. Now, let's first go over this flow trading plan as well. Where that daily fair value gap, can we retrade back into it? Well, this is quite a long wick at the top right there. I'm not too convinced on that. We do want to trade back into that. But we can wait. We can wait for our session. Let's say we trade between 2 a.m. to 5 a.m., maybe a little bit longer. Let's see what we have right here. On the 4-hour, we already continue lower right here. Let's dive into the 1 hour as well. On the 1 hour, we already continue lower. We had this 1 hour value gap right there. We do not deliver into that. This fair value gap, so let's retrace it a little bit. If we wanted to deliver into this daily value gap, then this fair value gap on the 1 hour should have ideally held, right? To push price higher into the daily fair value gap. Perfect, we do not see that happen. We fail to follow through, so order flow, fair value gap fails to follow through with a new fair value gap higher. Perfect. We see a new fair value gap continuing lower actually right there. Okay, can we now continue lower and can we create new fair value gaps lower off of that? Well, that is exactly what we see. And then after we have this fair value gap right there and we have the low that we just took out. We have this fair value area right there as well. Now, what can we do from here? Now it's the same exact thing. We have found our context. We have found our target right there. We are quite confident that we are going to deliver into these areas first right there. We first delivered into that and now we're going to deliver into that monthly fair value gap. So the lower time frame, the 1 hour, is guiding us there through fair value gaps, through candle signs, through the understanding of those fair value areas as well. So here, if we already want to continue lower, then we simply have context, 1 hour context to deliver us there. When we are looking at a flow trading plan, the ideal context that we want to focus on is 1 hour, 4 hour. 4 hours is a little bit of higher time frame, of course. We can also have 15-minute and even 5-minute context. 15-minute context, you ideally want to have that within a good understanding of 1 hour and 4 hour or something on the higher time frame context as well. If you're just blindly trading the 50-minute or the 5-minute everywhere, every 50-minute context area, that's not going to work very well. So first, get used to the 1 hour and 4 hour context for your flow trading plan if you're just starting out. And after, you can get more advanced to go into the 15-minute as well. Now right here, we can go into the 1 minute, right? Because the 1 minute ST plus RE, for example. So what is your entry preference, essentially? Just simply find your entry preference, and then whatever your entry preference may be, because it could have also been a 1 hour entry even, then right here, or even a 15-minute entry based on candle signs. 1 minute ST right there and 1 minute RE. Let's say this was an entry, for example, we covered at high and we target our 1 to 2 and we target lower right there as well. That is exactly one manner of how you get to a bias and a narrative using a flow trading plan. Now here we are on E-mini S&P 500, and during a live session right here, I mentioned actually that we might want to sweep this high right there to then actually target the lows right there. Now why do I even mention that about that certain live session? That is because I personally have traded E-mini S&P for a very long time as well. I have had a flow trading plan that I applied to E-mini S&P. So whenever you stick to a certain instrument, then you will notice certain characteristics. You will see things happening that might sound like a prediction to others, but it's just your experience talking. It's just your intuition talking. And that is your advantage as well over a filtering process where you already know, you just have that feeling, I think we're going to sweep that high to then continue lower right there. Can you really explain it? Not really. Now, of course, that needs to be backed with certain arguments. Here we are on the 1 hour. Let's zoom it out a little bit. Let's look at the daily as well. What are we doing on the daily right here? On the daily, we have marked out actually a previous, well, this a little bit lower, previous day high right there. Let's take the 1 hour swing high. Then we have the previous day low as well sitting right there. Perfect. On the 4 hour, do we have anything interesting? It's also a 4 hour swing high. All right, perfect. Now, on the 1 hour, what can we see? Let's pay attention to detail again right here. If we come above that high, we ideally, go very fast, we ideally would want to see a fair value gap overlapping with this high to create a fair value area to respect that, offer fair value to continue higher off that. When we wick this like that, that is a first sign that we might actually want to sweep it right there to potentially target opposing liquidity. But we do have a 1 hour fair value gap going against us right there, 1 hour order block, which could act as resistance to then potentially continue higher. So here, let's dive into the 15-minute. Now we can look at 15-minute context potentially right here to capitalize on this move. So what do we see? We see a 2 candle rejection actually right there perfectly. Where in this 15-minute fair value gap, does this need to be an entry for you? It can definitely be an entry. If you are more experienced, etc., this can definitely be an entry in itself. But right here, what can you also do? Pay attention to detail again. This was a 1 hour order block, 1 hour value gap right there. If that wants to hold, this will create a 2 candle rejection to then continue higher. 2 candle rejection. First candle does not reject right there. Previous candle low sweep right there to then potentially continue higher, create a rejection. All right, perfect. So right now the 2 candle rejection for bullish prices is perfectly fine intact. Now, why do I even go over that? With a flow trading plan especially, you'll notice this as well in the filtering process, but with a flow trading plan, especially on the lower time frame, I always like to create bullish and bearish arguments. So even if I'm looking at bearish prices, I do not neglect, all right, we have bullish 2 candle rejection. And that is a perfect sign because if that 2 candle rejection, the bullish 2 candle rejection fails, then I'm even more bearish. So it's just another bearish argument that's being created right there. So here we come into that 50-minute fair value gap right there, and eventually we continue lower. Now, if we want to go into the lower time frame, we could even wait for that 2 candle rejection right there to be taken out to be more confident about that trade ID. So going into the 1 minute right here, does this need to be an entry? Yes, it can definitely be an entry. 1 minute sharp turn right there off that 15-minute context area. But even when we wait for that 2 candle rejection to get taken out, that can even be a sell stop right there. As long as you get involved, because the important part was that bias and narrative that we created on the 1 hour, that sweep of liquidity to then target that previous day low that we had right there. That was the important part. And after we take out that previous day low, after we reach those targets, we reevaluate again. So what are we doing? Are we sweeping? Are we running at low right there? What are we doing? If we want to continue lower, then we will continue lower off of this 1 hour fair value gap. 2 candle rejection right here. First candle is rejection, second candle rejection, but we do not create that new fair value gap lower. That is quite suspicious. Okay, 15 minute, what is it doing right here? 15 minute trying to push lower, also not creating those fair value gaps lower. And after, this push is not that crazy in that power hour right there. So if you get more experience, then even capitalizing on this right here on the 5 minute, that is extremely doable eventually. Now, this is how you want to get to a bias and a narrative as well. Make use of those fair value areas like we see right there. Beautiful fair value area, candle signs, sweep, run, PD erase, 2 candle rejection, and order flow. Are we following through with a new fair value gap lower right there? Do this mainly on the 1 hour and 4 hour if you're just starting out. And eventually you're going to be able to master a certain instrument as well. Now, what we already discussed right here is again high probability. So the first thing, a high probability right there is 4 hour context, 1 hour context, 50 minutes, and again, I would argue 5 minute context inside bigger contexts are also high probability. Low probability if you're just starting out and you can't really seem to, or well, if you're just starting out, it's more so about experience as well. 50 minute context by itself is quite tricky to trade if you're just starting out. So give it some time. I would argue see and study after your trading day, for example, your weekly breakdowns, see where the 50 minute context and 5 minute context are indeed holding. And then eventually you can look to trade those context areas as well. Then moving on right here. If we now want to understand a hybrid trader, because we have gone over the flow trading plan and the filtering process trading plan, then the hybrid trader is the following. We start off with the filtering process. Like we see, the first step is always filtering process for a hybrid trader. So the bias and narrative that we went over in a flow trading plan, you would not do that with a hybrid trader. Now, right here, if we look at the second one, it's narrative. Clear draw liquidity, but no clear narrative. So the draw liquidity, the bias is extremely obvious, as in we're going lower, we're going higher, like we saw on GBP US dollar, the example we used. There's a clear draw liquidity, but no clear narrative on the daily and the 4 hour right there. So if you're a filtering process trader, you might be a little bit stuck. And if you feel like you're limiting yourself, then the hybrid trader right here might be your option. Then, if you have no clear narrative, we can go into the third step, where it becomes flow. Use flow to go into the lower time frame right now. Target the drawn liquidity based on filtering process. So where the filtering process drawn liquidity right there is extremely clear, and you have picked out the highest probability pair, highest probability instrument, like we saw on GBP US dollar. But you can't go into the 4 hour, or there's no clear narrative on the 4 hour or the daily. Now you can go into the 1 hour. You can go into the 50 minute to still capitalize on that draw on liquidity as well. Then, if we move on, we see we have practice. So what resonates with you? Again, you can go over both, and that is perfectly fine. You can try to figure out which one resonates with you. You do not need to trade them both, of course. I would love for you to stick to one. So trading both, that's not going to be very fruitful. That's going to be detrimental in the beginning. Eventually, after sticking to one for months, can you switch around? 100%. 100%. You can, of course, do that. But find out what resonates with you. So which one did you find easier to understand? Do you like to focus on one instrument? All the things we went over this past week as well. Then pick an instrument right there. If, of course, the flow trading plan resonates with you, then pick an instrument. Pick the instrument that you would like to focus on. Study that instrument in hindsight and start tape reading it. Now, for those 3 and 4, I want to go into the chart as well a little bit. So first of all, number 3, how would you study it in hindsight right here? If you choose to trade ES, for example, then you can literally do the same as we just did right there. You can make case studies right there, use the annotation tool right there, fair value, not offered, sweeping instead, etc. And that is what you can do every single day, and you will notice that you will get a really good understanding of that instrument that you are trading. So for example, if we do a hindsight study right here, what happened? Well, in the 1 hour time frame, I can see that we tried to follow through higher off of that, and we did not create a fair value gap higher right there. So then we swept this high on the lower time frame. That must have been some kind of sharp turn right there. We actually swept the sharp turn. 8:30 news right there comes into the market and just absolutely destroys price action and continues lower right there. After that, what do we see? We have this fair value area right there, 1 hour fair value gap right there, which we are currently respecting, but not creating a new fair value gap lower off of. Okay, could it be because we had so much volatility and we took both sides of the market essentially that we might want to consolidate right there? Which is also an interesting thing, because that adds on to the understanding New York AM session, like we discussed for the indices, the AM session, if that takes out a lot of volatility, then the PM session might not be very fruitful. Same if the AM session at the beginning, so 8:30, before 8:30 already takes liquidity and AM session is not very fruitful, then the PM session might actually be very fruitful. So they are switching around constantly. Now, that could be the reason right there. And then you can do that for every single day. So what do we see right here? We sweep this low right there. And since we sweep the low, we might not be offering fair value. We disrespect this fair value gap right there. Oh, this fair value gap right there as well. Then we take out those highs. Personally, in hindsight or in real time, I would not be super convinced if we do want to continue higher just yet. So we might want to wait for some extra confirmation. Go into the 15-minute time frame. Then we get this 15-minute fair value gap higher off of that. Okay, perfect. Perfect 2-candle rejection. Could have already been an entry. Again, on the 5-minute, on the 1-minute, find your entry. This is how you do hindsight studies right there. No need to use the replay tools. Just do it in hindsight. Then tape reading. What is tape reading? Well, for example, if we go into the live market right here and we go and look at Bitcoin. Bitcoin, random example, but it's the only live market that we currently have since it's the weekend. So right here on Bitcoin, if we are tape reading, then I don't do anything. I don't want to place a demo order. I don't want to place a live order. I don't want to do anything. But I just want to study price action right there. And I just want to look at the things that we just learned in the flow trading plan. And I just want to study. So here, what can we see, for example? Now just market everything out. Without getting involved or anything, I'm just looking at price action. 5-minute fair value gap, we see right there. If this 5-minute fair value gap wants to hold, then it should ideally create a new fair value gap higher right there off of this fair value gap. We have a 2-candle rejection perfectly. Only thing that worries me a little bit is that long wick at the top right there. Again, until we create a bearish fair value gap, we are still bullish right there. And we could even target this 5-minute fair value gap higher right there. Perfect. Let's go into the 1-minute. What are we seeing? We still have this 1-minute fair value gap right there. Okay, we can potentially continue higher off that. We have perfect 2-candle rejection. I'm expecting the next candle, that's the highest probability thing to do. I'm expecting the next candle right there to also be bullish, to follow through, if we do want to do that, towards that high and towards that high as well. That is simply tape reading. And if that candle turns bearish right there, takes out this low, for example, okay, we might actually be bearish right there and we could find a new fair value gap lower to continue lower off of that. That is tape reading, applying the concepts in real time without doing anything. No demo orders, nothing order-wise. That practice will pay off a lot. You can trust me in that. All right, perfect. Thank you.